It's been a while. It's been way too long. People have been asking for Colin Fisher. So Colin is back. Why did it take so long, Colin? What's going on?
Well, I mean, um, you've been doing some good interviews with management about more substantive things. So I think that's one. And I think number two is, generally we've discussed things around the financials and interpretation of the financials and potential ways of in, uh, uh, interpreting financials vis-a-vis strategy and outlook and the good, the bad, and the ugly of that. So there hasn't been any financials for a hell of a long time.
Yeah, and I think not only did we get just fourth quarter, we should be getting first quarter soon, right?
Well, according to them, and I don't see why they would be delayed. So I think they said it's next week, and I think the call's on the 26th. So yeah, I would anticipate that's next week. And then I have to look it up, but I think the next one for even Q2 is shortly thereafter. So
Man, we're gonna get overloaded with the numbers.
yeah, I'll take it. Yeah, so Q2 will be August 29th for the venture. So it'll be, I guess, a month after the Q1 numbers if they're coming out next week. So it'll be roughly 4 weeks later.
Okay, so the Q4 numbers are out. Let's hear your thoughts.
Well, I mean, I think I'm like anybody. I was not happy they came out at 11 p.m. I was a bit tired reading it. I will say, though, I think my heart skipped a beat when I first saw the initial write-downs for the impairment costs. I think that was a bit, I mean, on first blush, that stuff is always makes your heart skip a beat. Once you get into it, it was fine. It's just a bit of a disappointment. Here we are expecting these numbers to come out, and unfortunately, there's additional noise. It truly is noise from a purely business point of view. It's not really. It's effectively meaningless. And the other thing you have to understand with a rising rate environment, the way these marks down work is that they're going to be looking forward on a business level. So they're going to say, what are the expected revenues that we're going to get from this? And then they'll create some terminal value for that. And then they'll do a discount, use a discount rate to do a net present value for those numbers. And so what happens is you use a conservative outlook going forward in terms of revenues for that business. And then they're going to, utilize a 20% discount rate or some such thing or higher. I've seen 25% discount rates. And so, if you use a conservative forward-looking revenue and then a steep discount, then you're going to crush the valuation on the on the balance sheet. And I think if I went to anyone and said that I value a technology company by its balance sheet, I'd be laughed out of the room. I mean, it's just not a balance sheet driven valuation for a company. So, I think Gary's statement in his interview is correct. It's unfortunately you pay a lot of money to come up with these effectively meaningless methodologies for a balance sheet, which is irrelevant. So from a purely business perspective, it's absolutely meaningless. The unfortunate side effect is when you write down these massive numbers, it creates this huge amount of noise, and then you got to go through and pick out the signal from the noise, and the signal is not horrible. In fact, it's quite good. So if with regards to EBITDA, EBITDA is actually a relatively strong signal from this particular company. So we have negative $354,000. That's been trending ever more towards the positive. Gross margins are now at 42%, and I would suspect that the go forward trend of that will get ever closer to north of 50%, which I think will be a very good litmus test. With some of these acquisitions.
Now let me just ask you here something. So you're talking about margins. So now we are at 42, and it will continue trending towards 50. So that's a pretty high quality revenue source. Did you see, or do you see any companies, like for example on NASDAQ, that have those kinds of margins and are trading for like 1x revenues?
I haven't, to be honest, for a variety of reasons. Haven't been looking at the comparative valuations of these, but valuations on, and I don't love comparative valuations for a number of reasons. However, that said, because it's not just the singular number. So, I'm just trying to think. So Shopify is at a 47.5% gross margin. The thing is, their last 12 months free cash flow margin is negative. And their EV to annualized revenue is 13.7. Their growth rate is around 25%. So I would submit that we have higher growth prospects. I would suspect our steady state of revenue will be north of 65 and closer to 70, 75. But no one gives this company any forward-looking benefit. Everything is Chicken Little. The sky's constantly falling. Everything they do has a dash of panic and dismay. Snowflake, which is again not a very great analysis comparison, but their gross margins are 66. Their revenue growth rate is around 47%, and their forward EV to annualized revenue is 22.7. So, pick a number. Some of them, Confluent is 15 times forward EV to annualized revenue. So the growth rate, TWOU, has a gross margin of 71%, but the revenue growth rate is negative, and they're trading at 1.3 times. So MongoDB is 73% gross margin, revenue growth rate of 29, and they're trading at 20 times forward. So it's very tough.
So the moment these companies have growth, the valuation just explodes.
Yeah. So if you sort of think of it as a function element, right? So something is a function of something else. The growth factor So the sensitivity of so what I would say is that the higher the gross margin, that there's a greater the growth factor applied is more sensitive, and it has a greater impact on the forward-looking revenues. And it sort of makes sense, because if your growth is significant and it's super high quality, high margin revenue, then you would give that a greater impact for forward revenues. What I would say with Voxtur is that here's a company that, and there's a lot of, it's also tough to parse a lot of the numbers because of the noise around it, because even making an acquisition, operations, it was late. I've had a long day. I haven't even parsed
You
through
cut
like,
off. You
oh,
cut
it
off.
was late.
No, when you said even when you make acquisitions, and then you cut off. Can you say it again?
Oh, even when you make acquisitions, there's a lot of noise, right? Just because you get deal cost noise, you get if you let people go, there's you get new income, you get potentially one-time costs, so there's just every time this company, for better or worse, has done a lot of moves, I think for the better, but there's a lot of naysayers around this company, and they will always, anything that they do well, um people seem to dump on it, but there's noise around it because you're not getting to see a steady state of just ongoing growth simplified in the clear sky. We got a couple of quarters of that, but not a ton. And then you throw on top of it the macroeconomic, which has never been shown, like has just never been experienced before. And all of the comparatives have been getting slaughtered. Their top line revenues, like we dropped, top line revenue, I think our drop was 12%. And even before Blue Water was on, our gross margins expanded, so we had top line revenue drop, but our gross profit only dropped, I think, 2 or 3%. So that's sort of 3 quarters up until Q3 2022, where I think we got 3 quarters of relatively quiet, no noise revenues and growth and whatnot. And so what happened was in Q4 of 2021, they made the Zomax acquisition, and that had, that was, I think, a very good acquisition. I think it had a bunch of merit in it. But what it also created was a situation where they bought both the good and the bad. And the quote unquote bad of it was that it came with a lot of legacy revenue. And that legacy revenue was lower margin elements. And what it did was our top line expanded significantly because of it, but it crushed the gross margins. And so throughout 2022, what you saw was that there was a ever increasing expansion of the gross margins. And so Q1 was 34. Because of the noise of what was happening in the marketplace, our margins dropped down to 32, then Q3, 38. Now we're seeing some impact of Blue Water on there, but not a ton, for the record, I don't think, because I think revenues were impacted by a client shift. And so what you see is, from Q1 to Q3, margins going up in the face of top line revenues dropping. So actually, gross profit from Q1 2022 to Q3 2022, gross profits only dropped like 2 or 3%, even though top line revenue dropped, I think it was 12 or 13%. So the expansion of the gross margins and the shifting from the old business to the new business, I think, has been on display. Additionally, the nature of the business being one that is able to be sustainable and to maintain steady state in the face of changing environment is actually, I think, true. I.e., and maybe let me say that again in English. In different environments where interest rates are going up or going down, or certain parts of the market are slowing down, so origination or default or things like home equity lines of credit, we do well in all of those environments. We have different businesses that will pick up and slow down in opposition to each other within the business, and will provide a fairly steady state of revenue. What is really rare and happens, I can't think of ever, is where you get a situation where the economics of the world shift as they have, and then you have a government situation that comes in and says, we're putting a moratorium on foreclosures. We're putting a moratorium on this. And so you get this highly distorted marketplace. And yet, in the face of all that, the company still does, in my opinion, exceptionally well, with the top line revenue only dropping off 12%. Remember, its comparables were dropping 30%, 40%, 60%. Their gross profit, their margins, I mean, it was catastrophic for a lot of other companies. Unfortunately, for a few things, there was a few own goals. Voxtur didn't get in front of dealing with the related party receivables. And so what that did was it pushed some revenues that would have been into Q3 into Q4 and maybe beyond. I don't know how, that I haven't really dug into that. So you lose some revenues, you lose some margins. We get the noise of how they deal with that, and a potential loss of some revenues as per some of the notes in the financials. So what should have been these really good situations, revenues are steady in spite of all this stuff. We have, and Q3 would have been, I think, net income positive, but for that adjustment. Then you lose your your auditor, and then you get this situation where it's just noise on noise on noise, and people want to FUD all over the place, fear, uncertainty, and doubt, and create the situation where they refuse to see that which is actually positive in this company. And so, in the light of what I think is, 2008, which was horrible for most of the world, wasn't all that crazy for a lot of the real estate stuff in certain regards. This is a catastrophe for anything that is interest rate sensitive when you get a backing up of interest rates like this. So, in an incredibly violent storm out on the sea, if you thought, you need to find the center of the boat in order to find the least amount of noise. You sit at the bow of the boat, you're getting whipped around. You sit at the stern of the boat, you get whipped around. You sit at the far starboard, you get whipped around. And so, you need to figure out where the center point with the least amount of noise is. When you look at this company, you really have to, there's just unfortunately been a ton of noise. I think the noise will settle down. Losing the auditor was a shock. I've never encountered anything like that. I've talked to a ton of accountants. None of them have seen anything like this. And so,
it's surely freaking crazy the number of things that went wrong, like what you just said. Moratorium, foreclosure business is dead. Then interest rates raises 10 times in a row. Never happened before. Happens to Voxtur. Then they lose the freaking auditor. None of their fault. It's just one bad luck after another, and they're still, they're like everything that's happening is trying to drown them, and they still are swimming. I mean, it's just unreal how many bad things happen.
Yeah, and but there's some things that they have to take responsibility for. They should have dealt with that related party issue sometime earlier. Um, and and I'm not here to point fingers. I'm just saying there are some things that are within their control that they could have dealt with that they didn't. And I want to be clear, that doesn't mean that they're bad management or whatnot. People make mistakes, things get out of control. Sometimes it doesn't, death by 1,000 cuts is easier to happen sometimes than just a singular bad wound. But I don't want to make it seem like Voxtur is completely blameless. They take some responsibility in this stuff. But that said, writ large, I'm talking about 10% problems out of a whole thing. This is 90% of the problems have been foisted upon them that were outside of their control. There's some that were within their control. But listen, in the grand scheme of things, that's a fairly good batting average. And so, but I try to find simpler points to distill my view of what you're looking at. I think that when you see revenues as steady as they were, gross margins expanding, and a few people have asked me, how could it be that they sell an asset that they bought for X amount for a potentially higher amount? And one of the things that I think, and I've seen this happen I shouldn't say many times, but I have seen happen before, which is that if, let's say, we buy a company, its technology is not as good as the technology that's within Voxtur. Voxtur adopts the company, they implement the technology, they move it throughout, they increase the efficiency of that platform, they implement all the systems in that that we are using. Then they say, you know what, this part, we've done all we can with this. We've put the systems in place, we do this, but that's not our business. We don't want to do that business. It's too much manpower, it's lower cost stuff. Maybe it even puts us in competition with some of the clients that we want to go after. And so they decide to divest themselves of that. In that instance, it's a very real, I won't even say possibility, probability that they will get a higher valuation for that company, because if you take X amount of revenue, gross margins are 25%, and you drive them up to 32%, 33%, those are not great margins for us, but that's a 33%, 30% plus margin expansion. The net revenues, gross profits go up from that. And so if you sell that off into another company, they're going to be like, oh, this is a great platform for us to adopt, and we can then throw all our different businesses. We sell it for a better amount. They get a better platform. We get a new customer. We stop looking like a potential competitor on certain elements, and it becomes a very virtuous element for Voxtur and for the client and for future sales. And it's also why there's a high probability that some of the acquisitions that they made at $1 could be potentially worth $2, maybe $3. Maybe it's only $1.50, but it's more than that which they paid. And that is part of the reason why I think some of the allusions that Gary has made in his conversations that say, hey, we're going to be debt free, actually makes a lot of sense. Because if you sell some of this business, which is not a core asset, but you've already gussied up and made better and used your own implementations and systems to do so, then they make a lot more money. So for that same deal, and you get potentially newer clients out of that as well. So I suspect that the proposition of them being able to sell some non-core assets that have been upgraded and bolstered with our technology or Voxtur's technology is a high probability case, and that they will make more money than they made before because they've expanded the margins and have reduced the cost and expanded the capability and throughput that no one else otherwise would have had, but for the technology platform of Voxtur being implemented.
Very interesting. All right, Colin. Well, thanks for your insights on the Q4, and I'm sure we'll do this again when Q1 come out.
Yeah, I guess that's next week. So yeah, let's we'll gear up. But just to finish off, I think the fact that the revenues were started to increase, gross margins expanded. Let me put that on a percentage basis just before I go, because I haven't actually done it. But let's see the numbers.
But I looked at one of the things you said is that when you look at Q1 numbers, Q1 revenue was almost 41 million, and the gross profit was 14 million. Now Q4 is lower revenues, but gross profit is higher because of the margin expansion.
That's right.
The margin went from 34% to 42%, and as a result of this, revenues were only 36 instead of 41, but the gross profit was 15.3 million versus 13.9 million.
Yeah, that's right. And I think Q3 is only off by like 500,000 or something to Q1 off the top of my head. So, gross margins expanded almost 11% quarter over quarter. So, and the adjusted EBITDA has, gone significantly in our favor already. So, I have to get into the CFO. Why I wasn't super happy with the cash flow from operations, but I think there's probably some one-time costs in there and a few other noise because of acquisitions, and those like acquisition costs are not insignificant. So I'd like to delve into that because I do know that Q2 to Q3 CFO was positive. I think it was like 49 grand. But still,
you mean Q2 to Q3 of 2023 or 2022?
23. We haven't gone into Q3 yet. So, but cash flow from operations was positive by like 49,000 or something. That's off the top of my head. But so I think that writ large, we are seeing a company that is proving to be having revenues that are robust in multiple styles of markets. That said, but for exceptionally weird, strange, unprecedented times, we did have some drawdowns. But in the same breath, they've had significant positives, i.e., revenues not dropping nearly as much, gross profits trending upward, and gross margins expanding. And I expect that those gross margins will expand ever more, and that cash flow from operations will expand ever more as a function of if and when Gary sells some non-strategic assets that have been have been improved based on being owned by Voxtur and having the system implemented. That the cash flow from operations will expand ever more, and that we will have net income that will look, I think, significantly better. But again, going back to my first premise, net top line revenues have not dropped nearly as much as they could have compared to its compatriots. Gross margins have been staying robust and expanding. EBITDA has been looking excellent. There's some noisy CFO, but that can be impacted by a host of different things. And so I think in general, it's looking really good. And we're seeing the proof that this is actually a company that can do well in, let's say, 98% of all market conditions, and that we're literally living in the 1 to 2% never seen before type stuff. And even in that phase, they're still doing relatively okay. yeah, they've had a few own goals. They've had some noise that they've brought on themselves, but you know, no management team is perfect, never will be. And it's not what mistakes you make, but how you go around and correct them. And I think, you know, they've always been sort of focused in the right direction and making the right moves. So I'm hoping that Q1 looks even better, that margins have expanded more. I hope that Q4 top line revenue is higher. I'm not 100% on that, but I would suspect that's probably the case. And hopefully we see some interesting elements vis-a-vis CFO. Now, there will be noise because there was that note sold and there's going to be some write-down. So there's always noise. I just want to see the noise lessen for Q1. But, you know, I think when you pull out the noise, look for the signal that the signal will continue in the proper direction.
Perfect. Thank you very much.
Thanks, man. Talk soon. Bye-bye.